Good evening. Excuse me. Today, of course, is October 27th, 2024, and we are into the last week of October before we move into November. And this has been a relatively quiet week, but again, we are also not spared with some major developments. On Saturday, of course, we have news that Israel has actually retaliated against Iran, and Israel they have caused significant damage to military site. Of course, today is also the day in which the Japanese has gone to election and should know the result of the election in the next few hours. Myself, my name is Daniel Ang, and I've been trading for quite some time. As a matter of fact, I've been doing this for almost 40 years now, since 1985. And this webinar is a regular program in which I try to pay back to the marketplace in terms of giving my updates to the markets. And this has been done with the sponsorship of none other than IronFX, a broker that has presence in over 180 jurisdictions and offering multiple asset classes for trading. And I do find them very responsive to my events, and I want to acknowledge them for the sponsorship. Of course, I also like to bring attention to the fact that this session is not an offer to buy or sell any kind of securities, be it FX, CFDs, or even futures. Okay, so these are considered to be margin products, and they do carry risk. So before you attempt to trade any kind of margin products, make sure you are aware of your own risk profile and your objective before you attempt to trade margin products. And I'll be sharing with you my views on the various market as I finish the economic data that has been revealed throughout the week itself, and what we will be looking at into the coming week. And the markets in which we will be covering will cover purely the equity index as well as the foreign exchange. I will also touch a little bit on precious metals like gold and silver, and energy products like crude oil and natural gas. And I will also touch on a couple of crypto. If you have any products that you want me to talk about that IronFX do offer on their MT4 platform, do let me know. Obviously, the products that I will be covering will only be confined to those products offered by IronFX for retail trading. Okay, and if you have any questions, do post them into the Q&A so I can address their questions as we go along, or you can hold your questions all the way to the end where we have a Q&A session. Now, without much ado, the week itself started off with the Bank of Canada cutting interest rates, and this has been no surprise, and the market has more or less expected from the Bank of Canada. This is not the first time they are cutting rates. In fact, we can see from this chart here, the interest rate has plateaued out at 5%, and that has continued for quite some time, from the August of last year all the way to August of this year. And beginning in September, we can see that interest rates has been coming down in Canada. So this has been the trajectory. The current rate, policy rates are 3.25%, and this cut in interest rates by 50 basis points has been more or less expected. So there is no surprise here, but then the market in more to come towards the end of the year and also into 2025. And as far as the PMI, which is the Purchasing Managers Index, we are hearing from Germany. Now, this index is compiled by the Hamburg Commercial Bank. So you can see this HCOB is Germany manufacturing PMI, and we can see that PMI has actually gone back up. So here I have a little bit of a boo-boo here. It's actually 42.6. Okay, it's not 4.26, so the big figure should be 40.6. So this has been 42.6. So this has been relatively good because market was expecting a somewhat weaker number compared to the previous month of September. Previous month was 40.6, and of course 40.6 is still in dire strait, because anything below 50 is a what we call a recessionary number. Okay, 42.6 is at least an improvement. So this has been encouraging. So we want to see whether it can actually maintain momentum. But by and large, we can see that Germany economy has been slipping perhaps into the second year of a recession. Any kind of help that they can get from the economic data as far as the manufacturing sector is concerned will be very, very much welcome. And over here, we can see that Eurozone is basically mimicking what we are seeing in Germany. The Purchasing Managers Index for October has actually gone back down. The market was expecting 45.1, and even the revision from the previous month of September was originally released at 47.6. It was revised quite drastically to 45. So this is not a good development. And here we can see that although there is a marginal uptick based on the expectation, it is still quite a seriously bad number. So overall in Germany, in the whole of the Eurozone, we can see manufacturing is still hemorrhaging. I think since the start of the war in Ukraine, and this has been the scenario, Germany was actually the engine of growth for the whole of Eurozone. Now it seems that they are the laggard, and in fact, among the G7, Germany right now is the worst performing economy. So this is something that we have to keep at the back of our mind when we are dealing with European Equity Index or even the Euro currency. Okay, so here we can see services PMI for the Eurozone has not really improved that much. In fact, you can see the revision from September was 55.2, has been marked down quite a fair bit to 51.4, which is quite drastic. So here we have an even worse performance relative to the revision at 51.2. So services has always been the bright side of the same coin. Okay, if manufacturing is not doing well, at least services is still holding up the economy. Now we can see there's a serious downtick in the services sector, and this is going to add salt to the wound. And overall, this is definitely not a good development for the whole of Eurozone. Going forward, Eurozone will be under a lot of pressure to cut further rates, especially the European central banks. So based on these numbers, we would know that the entire Eurozone economy is not faring too well. Okay. Then over here, we can see in UK. Okay, UK, we only want to track the services PMI because services has been a dominant sector in the UK economy, very much like the United States. There was no revision. So the previous number for September was 52.4. Expectation was 52.2. It came down even worse at 51.8. So we can see a pattern over here. The whole of Europe, including the UK, that are supposed to do well is not doing that well as of late. Okay, and in the UK, services PMI has been the one holding up the UK economy, and this development of a serious markdown in prices in terms of the services PMI is definitely not a very welcome development. So we will also be watching how the Bank of England will be dealing with this, because if the services sector fail in the UK, it's going to have a catastrophic impact on the GDP later on, as we are looking into the Q3 GDP as we are talking. Okay, and of course in the United States, S&P Global Purchasing Managers Index. Remember, there are two sets of numbers that we are looking at for the PMI. We have the S&P Global being one index. The other one will be the ISM Purchasing Managers Index. So whether you are leaning more towards the S&P Global version or the ISM version, they both should be telling us more or less the same story here. Okay, as far as manufacturing is concerned, we are still seeing somewhat of a weak growth. Okay, there is a bit of a growth, but isn't that strong. Previously was 47.3, expectation was 47.5, came in 47.8. On balance, a good number, okay, but isn't that bright a number. Okay, whereas the one that we want to watch will be the services PMI for October. Previously was 55.2, no revision, but it has been expecting to go down to 55. It came in at 55.3, very much the same level as in September. So there is not much of a growth in the services sector in the United States. However, we do see that the manufacturing has bumped up a little bit. Okay, but again, it is not suggesting that the economy in the US is doing fantastically well. Okay, so again, with this in mind, we want to make sure that base relative to Europe, US is doing somewhat okay, but it is definitely not out of the woods. So before you pop the champagne and say that, okay, US economy is doing okay, yeah, I wouldn't qualify that as doing very, very good. Okay, because of late, we can see the most recent data coming out, whether it is the labor report or whether it is the retail sales, they all have been mysteriously been bumped up, okay, right ahead of the November 5th, November 5th US presidential election. So I suspect those numbers has been somewhat massaged, okay. We will know for sure after the election if those numbers continue to stay elevated, then maybe there's something going on in the US economy. But if after the election the numbers come back and tell us there are markdown revision, then we know those numbers are definitely been somewhat massaged to actually favor the incumbent. So we want to watch this election very closely. Actually, we are only 9 days away from this monumental election. Whatever the result, I think my net feeling is that it will not be necessarily be a great outcome, because I've always suspect that the loser of this election is definitely not going to be able to accept the result. Okay, so what it means is that there is a possibility of a January 6th recurrent, but I think this time it may be somewhat violent compared to the last time we saw a uprising among the voters. Okay, so again, watch out for this upcoming election. It's going to be monumental. Okay, and in fact, it is so key that whatever position you have, you want to lighten it somewhat, in my opinion, going into the election, because you just do not know. Nobody knows exactly what will be the outcome. However, we can see that the US equity markets has been somewhat elevated, suggesting that fund managers has more or less priced in a more likelihood of a Trump election win compared to a Harris victory. So based on what I can differ from the price action in the equity markets, that is also shown in the dollar. The dollar has been elevated. We also see gold at new record highs, and Bitcoin is coming back up again to test the all-time high. So it is a basket of asset classes that are all been rallying ahead of the election, which based on normal correlation should not be all going up all at the same time. But what we are seeing here is that whether it is risk on asset or risk off asset, they are all seeming to be trading higher. And I take it as a sign that most investors are actually leaning towards a possible win by Trump. Okay, but again, 90s is a long time in politics. Anything can change, and just remember to watch out for new developments as they unfold. We also have Tokyo CPI numbers. You can see CPI numbers. This is quite unique. Okay, we have the year-over-year headline CPI number for Tokyo, which is a good measurement for the entire Japan. Okay, so previous it was 2.2%. Market was expecting no expectation, but the revision was marked down to 2.1%. Was even lower at 1.8. What is curious is even after taking out the food and energy component, which is the core CPI, year over year, it is the same reading as the headline numbers. It makes no sense, because if you take something out of a composition, the number should be lower than the headline number. But here, what we see here, there is this a bit of a curiosity for me. Both set of numbers are showing the same value at 1.8%, okay, which I have not seen that many times in my career, but we can see that this is what we are seeing right now. So if inflation is coming down, it will give the Bank of excuse to hike interest rates. Okay, like I say, right now we are Japan has gone into an election, and there's a very real possibility the LDP, which is the current party ruling Japan, the guy who is nominated to take over the premiership, a guy named Shigiro Ishiba, he could end up as the prime minister with the shortest number of days as a prime minister. Okay, the previous guy who has the honor of being named the shortest PM in Japan lasted 54 days. Now remember, this guy recently nominated to be the prime minister of the party, by his party to be the new prime minister, and he did call for a general election, and the result coming in suggests that they may lose the majority in the in parliament. And if that's the case, there's a real risk that he may not be able to hold on to his prime ministership. So this could be very interesting tomorrow when Tokyo market opens. I suspect that it will impact the Nikkei 225. So tomorrow, for you out there who are trading Japanese equity markets, or even the yen currencies, it could actually negatively impact the currency itself. So watch out. Okay, so now we'll go into the market structure itself. I want to show you the chart. Okay, actually I want to see. Okay, never mind. I will talk about this first before I go into what's coming up next week. Okay, as usual, I will start off with the Dow Jones. Okay, now if you have questions, remember to drop your question into the Q&A so I can address them as they do appear. Let me see if there's any question right now. Does not seems to have. Okay, no question so far. Good. So now I want to go into the chart itself. I want to show you this chart. Oh boy, what did I do? Must have pressed something. Okay, can you see my MT4 charts? If you can you just type yes into the chat box so that at least I can see that you can see what I'm trying to show you. Okay, let's continue. And right, let's start with the monthly time frame because I like to show you the big picture before I go down to the 1 hour if I need to. Okay, this is the monthly time frame. We can see that the monthly time frame has no change. The only thing that changed is that the all-time high is at 43,331 on this IronFX MT4 platform. Of course, the absolute value will vary from platform to platform marginally, but by and large, you can see that this market is very bullish. Now, we only have about 4 more days to go before the end of October, and we can see that if this market ends in this current pattern, okay, this is a pattern that is going to be a bit of a worry because if this ends the month in this manner, okay, this is most likely a potential reversal pattern. Okay, so for those who are still holding on to long position, hoping for even higher prices ahead, if the month of October ends like this, or even worse, with the closing price below the low of the range so far, then it suggests that the market may have a temporary high. So this is something that you have to watch because from the monthly time frame, we can see there's a little bit of a potential reversal going on. And here, this is the weekly. Okay, I'm not going to show you this. This is the monthly. Hang on. And the weekly is over here. I want to show you the weekly. This is the weekly. Okay, the weekly. Let me expand this chart a little bit for you. You can see that the market, this week itself did not have a new high. It did try at the opening of the week itself, but it closes near the low of the week. So this is definitely not a good development. There's a bit of somewhat of a fatigue, from all this rally that we are seeing week after week. In fact, this is the first time this index here has closed week after 7 weeks of rally. Okay, so this is something that you want to note. Again, this is all about the election. I suspect that we only have less than 9 days going forward, and I think people are maybe there are some investors who are taking the money off the table for now, just to be playing defensive. So you want to watch how this develop going into this week. If this week ends on a weak note, okay, that could again amplify what I just mentioned based on the monthly time frame. So on the daily time frame, we can see this is a daily time frame. We have the first counter trend in place. Okay, so what it means is that the dominant trend is still very much in favor of upside. Okay, that has not changed. Whether it's from the monthly, the weekly, and the daily, it has not changed. However, on the daily time frame, we see there is currently a potential for a counter trend development. Okay, this counter trend is not fully developed yet because I need to have 2 days in which the prices are higher than what we saw on Friday. Okay, if Monday, Tuesday continue to trade lower, then it will this potential counter trend may drag even lower. Okay, so in the meantime, this is something that is already in development. It will be very clear in the lower time frame, such as the 1 hour. Okay, so I want to show you the 1 hour as well. This is so what we see here in the 4 hours is that the market has been trading, basically the entire week has been down. Okay, so this is the current development, and on Friday we have quite a bit of a sell down towards the close. Okay, so this is again telling us that there is a bit of a losing momentum to the upside. So for those who are still holding on to long position, you want to be very, very careful, because like I say, we are not that far from the very pivotal elections coming up on November the 5th. I suspect the last day of October is going to be violent. Okay, so just be very, very careful. Okay, let me show you the 1 hour. The 1 hour what we are seeing on the 4 hours is exemplified by here. The start of the week, it has been going down all the way, and it looks like by the closing of Friday, we can see that the entire price action is actually closing on a very, very weak note. Now, once this index here, which is the ADX, starts to climb, as price goes even lower, then you will really have to start to worry. Okay, but for now, let's take it for what it is. It is basically a correction so far, which is not fully developed yet. We are in the early stage of a potential pullback. Okay, and if this pullback does not result in I think there is still the scope to still categorize this as a correction. But I am of the view that October is still with us, and I have always mentioned October to be a very difficult month to trade. So far, the correction has not set in, but I think it's way, way overdue. So in my opinion, I want to take a little bit of a counter trend outlook based on the US equity markets. So this is the Dow. Let's take a look at the S&P 500, which is the main index traded by retail investors in America. Okay? So we can see very much like what we saw in the Dow Jones, this is the time frame has been very, very strong, and the projection for this, if you continue unabated, is going to be at 6,440. Okay, so the high traded so far is 5,881.4 based on the IronFX MT4 platform. Okay, but again, every platform will show slightly different high, so do check. And as far as this platform is concerned, this is what is showing on a monthly time. Very, very bullish, and there's still no sign that the market is about to flip. Okay, so now let's take a look at the lower time frame. We take a look at the weekly. So this is the weekly time frame. Again, there's no sign of a reversal just yet. Market has been very strong, and there is no counter trend yet. Okay, by and large, the dominant trend is very similar to what we saw in the Dow Jones, very, very bullish. So if you are taking a very long-term outlook on equity markets, the market has not shown any sign that it is about to do anything else. Okay, however, on those who are very keen to trade the lower time frame or medium time frame, you can see that very much like what we saw in the Dow Jones, the daily time frame is showing us there is already a counter trend. Now, unlike the Dow Jones, in which the corrective pattern that we see is still unfolding, this one has already formed out a very clear counter trend. Okay, because we have 2 days of up relative to the low traded on Wednesday. So on Friday, the market attempt to rally. You can see this is the daily time frame. Let me expand this chart for you. There is this bar here that looks very, very interesting. Now, this is what I call a pin bar, and the high of the pin bar actually traded momentarily into the slightly darkened gray pink area, and this is how I would classify as very deep retracements, because the market actually high was 5,881.4. It traded to a low of 5,761.3 before it actually attempted to rally and fail and actually close lower than the opening price. So this is a classic pin bar reversal. So I suspect based on this, we probably will see something like this going lower. What I mean is this, at the most optimistic, I think we will likely see something like this, okay? A development that unfolds into a three-wave targeting anywhere between 5,745 to 5,717, okay? So that will be very neat, three-wave pullback, and then market stabilize and then start to rally again. That will be continuing the overall dominant trend outlook. But here we have a dominant trend that's currently unfolding, and I suspect it will go below the Wednesday low, okay? And the target area, very optimistically, will be somewhere between 5,717 to 5,745. Now, let's take a look at the lower time frame to see if there's anything else different that we are seeing on the daily time frame. Okay, so when we look at 4 hours, it's again very clear that the rally attempt on Friday came late. Very, very late. It went deep into my what we call very deep retracement level. In fact, it went up to as much as 88.6% before it starts to turn back down. Okay, so here we can see it's an outside bar. Okay, a bearish engulfing bar. On what we are seeing on the daily time frame is a potential pin bar, or what we call a shooting star. Okay, so this actually will play out in a situation in which I think there is a possibility of further downside correction. Okay, like what I've shown you on the daily time frame, I think there's a possibility we are looking at something like this. Okay, a three-way pullback targeting 5,717 to 5,745. Okay, I don't think I need to show you the 1 hour. I think we should the same reading. So I want to go next to the Nasdaq. Nasdaq actually trade a little bit better than let's say the S&P 500 this week. We have continuation of the rally attempt in the Nasdaq 100 from the low of 17,238.8, and this is the third month in a row in which you can see that the Nasdaq 100 is attempting to recover everything that you have lost over the last 2.5 months or so. Okay, so this market is already note that in the earlier chart on the monthly time frame, both the Dow Jones and the S&P 500 do not have a counter trend in place in the monthly time frame. However, the Nasdaq 100 do have a counter trend in place. Okay, so what it means is that on a relative basis, the Nasdaq is on balance, in my opinion, weaker than the S&P 500 and the Dow. So let's say if you have a slightly bearish outlook on US equity markets, if I'm you, I will be seriously looking at the Nasdaq 100 if I'm going to be adopting a somewhat bearish outlook. Okay, because on a monthly time frame, while the S&P 500 and the Dow do not exhibit any kind of counter trend move, which is to the downside, the Nasdaq 100 is currently showing a counter trend is already in place. Okay, so let's confirm by looking at the weekly time frame. So this is the same chart you see. 100 weekly time frame, the market now is way above the 88.6% retracement level. The all-time high that we can see is at 30,758.3, and the highest traded on Friday was 20,565.3. So we are not that far away from the all-time high. There could be a possibility of a serious challenge of this all-time high here. But again, if we do see a break above this all-time high, we want to see next is whether it can sustain. However, if the market do break the all-time high but close on a weak note on the relative basis in the weekly time frame, it means that is a potential market. I'm sure it's going to go one way, but actually it wants to go the other side. Okay, be very careful. Okay, if you are looking to sell, you can sell. If I'm you, I will start looking for sell signal here, because based on what I can see, the monthly time frame is already in very deep retracement. The weekly is also in very deep retracement as far as the counter trend is concerned. So it does make sense from a risk reward perspective to start looking out for some kind of sell position in the Nasdaq 100 with the idea that if the price does break the all-time high, then maybe I should exit the short for a while. But if I'm going to be watching the reaction at the close, because I suspect that this could be a fake move, then I want to make sure I put my stop slightly further away to give the market some room to maneuver. And then if it does close on a weak note after taking the all-time high, then I know that is a fake move and the market is slightly to trade aggressively to the downside after that. Okay, so let's take a look at the I just show you the day. I just show you the weekly. Let me show you the daily time frame. Now you can see the daily time frame do not have a trend. So on the daily time frame, it was originally what we can see here is only one color, and it's telling me in the medium term based on the daily time frame, this market has turned bullish. So we get a bit of a conflicting signal on the monthly, weekly. Is still showing us that Nasdaq 100 is still in the counter trend mode. Okay. However, in the daily time frame, the market recent move up, okay, especially this week, has actually negated the counter trend narrative, and is showing us, based on what I can see, the market based on the daily time frame has turned positive. So we're getting a bit of a mixed signal here. So maybe the best thing is to do is stay aside and watch and see what else happens. Okay, if you really have to do something in this index here, take your cue from the lower time frame. On the 4 hours, there is still no sign that the sellers are in yet. Okay, yes, the market did go high and close weak, but this is 4 hours. There is still no counter trend in place. So we don't see any kind of signals coming in from this market based on the 4 hours. However, on the 1 hour, we do have a counter trend in place. So again, here is a little bit of a conflicting signal. Monthly, weekly, all have counter trend. Daily, 4 hours, market very bullish. But on the 1 hour, again, we are seeing a counter trend. So what do we do? So it all depends on the time horizon. If you're trading very short term, then perhaps you want to go with a 1 hour using the daily time frame as your guide. Okay. What I would do if I'm you is that I will put my stock way above the all-time high. Okay, to give it room to wriggle just in case the market attempt to take it to a new high and then reverse back downwards. Okay, but basically based on everything that I've mentioned so far, I am of the view that I am very keen to take a counter trend approach if they all synchronize across all time frame. Right now, I need the weekly and the daily to also show me the same thing. However, it is not just yet. Okay, so for those who are unsure what to do next, maybe the best thing is to stand aside and watch. Okay. Now, as we go into the equity index, let's take a look across the Atlantic and look at the what's happening in UK. Okay, this is the monthly time frame for the FTSE 100. Okay, this is the UK stock index. Very much like the Nasdaq 100, we are beginning to see that this market overall is actually very bullish and with counter trend in place. From the high of 8,477.3, the market actually went down and then bounced back up very, very strongly. And this week itself, we have a bit of a big bar in place. Okay, we get this big bar here. Market actually went up, come back down again. So this is not something that you want to see on the monthly basis. But again, we have 4 more days to go before the end of the month. We want to see how it actually ends at the end of 31st of October. Okay. At the end of the last trading day of October, this market here closed and looked something like this, or even worse, closed at the week, at the month low, then we know there is a very high possibility that we could be looking at lower prices going to November onwards. Okay. Now let's take a look at also the weekly time frame. Weekly time frame have not shown very much. Okay, I've seen that the market overall, we can see the bigger color here. Green, which signify the market is still in a very bullish phase. However, the market has been going into a sideways consolidation. Okay, now at best, I think there is the possibility of a deeper pullback. Okay, we have this move here. Okay, more or less around here. Okay, I have not synchronized the high low here, so we can see that there is that dip all the way from 8,477 point, I believe 5. Okay, all the way to 7,912.3, and then we have a very massive rally, and that rally has stopped. Okay, and over the last the high has been trying to get back into this gray area, which is what we call the very deep retracement. Okay, defined by a pullback, what we call a rebound of 78.6% to as high as 88.6%. So we can see that there were attempts to actually trade higher. However, this week the market actually couldn't sustain, goes back down and close even lower than the previous week's opening price. This is not a good development. Okay, so again, market has been elevated, but there is no follow-through buying. Okay, at least not that we can see. Now, in the daily time frame, what I did mention here is that the possibility of a sharper pullback or decline, okay, below what we have already seen is actually quite realistic. Okay, this 3-wave pullback, if it actually materialized, okay, calls for a further decline below 7,911.3, perhaps to as low as 7,856 to as low as 7,723.5. Okay, so this 2 area here is the equality move. Market actually attempt to trade higher, fail, come back down. Okay, but so far it has been in consolidation. However, if there's this market do a midterm, okay, break of this midterm support here and close below this imaginary line here, then there will be more incentive for the market to actually trade a lot lower going forward. Then if you're looking at the lower time frame to trade, it is clearly in that phase whereby I think it favors the downside more than the upside. Okay, here the index has not starting to climb yet, but if it start to accelerate to the downside, this index here will start to climb, and if it does climb, it actually is in favor of further losses ahead. Okay, so let's go into another European index by looking at the DAX, which is the German index. Here we can see the monthly time frame in the German index. You can see that the high traded is at 19,681.1. Okay. Now, earlier on, I did mention the German economy is not doing great, but that doesn't seem to matter to equity traders. They have managed to take the DAX to all-time high. And this is, of course, not in congruence, or rather not in sync with the fundamentals here. If the real economy is wobbly, okay, and why are their equity markets at all-time high? So you have to ask yourself this question. Okay, is there any other factor that caused investors to continue to buy German equity markets and take it to all-time high when the real fundamentals are showing us something otherwise? Okay, so I am a little bit suspicious about this move here. Moreover, where it closed currently, we are less than a week away from the end of the month. And if the month itself close anywhere like this is again a potential reversal sign. This is what I call a doji. And if it happens on the monthly time frame, okay, what does it say? It says that investors is really unsure whether to take the market higher or to take profit. Okay, so again, if I see this sign at the end of the close of 31st of October, then I am more leaning towards maybe perhaps further weakness may be forthcoming. Okay, then when we look at the weekly time frame, okay, we don't see any imminent signs that there is going to be a potential reversal just yet. Okay, because there is no clue here. This 2 bar here that we saw on the weekly time frame does not offer us a lot of clue, but the market is overall very, very bullish, technically speaking. So if we are looking for more clues, then go down to the lower time frame, for example, the daily time frame. Daily time frame, we are beginning to see a counter trend in place. Okay, we have 2 bars here. That means Thursday and Friday having higher lows than midweek. So this actually caused the market to actually pivot to the downside, and this could still be unfolding. If it continues to unfold, I think lower prices can be expected. And then if this index starts to climb northwards, then it will give me the a confirmation that I want. Because right now the index is not climbing, so there is no momentum in this move suggesting that we'll see further losses yet. If we see losses in the week ahead and this index start to climb up, okay, then it comes to me that the market is beginning to consider trading lower. Okay, and okay, this is the depth. But what I'm excited is actually looking at this index here called the Euro stock. Okay, now very few people talk about Euro stock, which is a combination of French listed companies and German listed companies, more in favor of French companies. Okay, maybe about 60-70% of the component stocks listed in this Euro stock here are based contributed by French listed company. Okay, and it is very interesting because it looks very similar to the Nikkei. No, I haven't shown you. It looks very similar to the Nasdaq 100, and it looks very similar to the FTSE 100. Okay, market seen a sharp drop, 1,000.4 drop down to as low as 4,471, and then we have a major uptick here to 5,071.7. Stop. Okay, there was no more attempt to travel higher. Okay, so we can see that where the position it is right now, the market is elevated outside the green box and is showing me a counter trend is currently in play. Okay, all I need now is for this index to start to climb, and this index will climb if either the market aggressively trade to the upside or aggressively to the downside. And if that's the case, whichever direction it takes, that's where the market is going to take us. On the weekly time frame, you can see this couple of weeks, we can see the market has actually attempted to trade higher. It has failed. Okay, 3 weeks in a row or 4 weeks in a row, it has tried to go higher, but it has failed. And if you try the upside, you have no momentum, you may want to try the downside. So I suspect, based on risk-reward ratio, I will be very keen to look for selling as far as European equity index is concerned, I think this will be one index I'll be high up my list. Okay, instead of selling the FTSE or the DAX, okay, I will, if I have a opinion that the market is going to come down in the Europe, and I will be seriously looking at the Euro stocks. Okay, so if you are also like me, want to see if you can see some kind of movement ahead in the Euro stock, maybe this is the market to look at. Okay, it is still very high price. Okay, so the point of invalidation is technically at 5,105.7, or if you a little bit more give the market a little bit more leeway, then you want to put it at all-time high of 5,120.4 and above. Okay, so you look for sell position, and if you can find one, well and good. If you cannot find on the daily, try to go down to the lower time frame and see if you can find something that suggests to you that the market may be getting ready to run. Okay, so far there is no sign. Okay, we have a pullback, rally attempt, pullback. Okay, and this is basically a three-wave move. It has completed equality move. The index is not climbing, so there is no momentum behind this move here, not yet. Okay, so if you look down one more time frame lower, which is the 1 hour time frame. Sorry. Okay, again, we don't see the index climbing just yet, so the market could be just getting, you know, some kind of sideways move for now. But if this index starts to climb, that is where I will be jumping in. Okay, so much for every. Let's look at Asia. And of course, when we talk about Asia, we cannot not talk about the Nikkei 225, which is the Japanese index. Now, earlier on, I did mention the election that's currently ongoing. We should know the result in a couple of hours time, maybe before the start of trading tomorrow in Tokyo. And the market is not behaving very right. Okay, because you can see the market dropped very drastically to 30,379 from a high of 42,400. Okay, so we can see that's a very deep drop. Of course, it's in a combination with a lot of things. The nomination of Shigeru Ishiba was actually a surprise. Nobody expected, and the market actually tanked. Okay, so now if he is not voted in to be the prime minister, the market, will it react positively or negatively? We do not know, because if he doesn't get the prime ministership, we also want to know who is going to be the new prime minister, and what his agenda is going to be all about. So we need a lot more data. The fact that he doesn't get his prime ministership by calling for a snap election may not mean the Nikkei is going to recover, because we also need to know who is going to be the next guy, what his policies are all about. Okay, so we have to watch for more details coming in as far as the election result is concerned. So watch out tomorrow morning before the Tokyo market open. So far, we can see that the market is bullish in the Nikkei 225 with a very mature 3 months old counter trend in place. Okay, so this suggests that the market is actually more favorable to our downside. So what happened this month is that this month the market in the Nikkei 225 actually went back up again to a high of 40,273, which is inside this very deep retracement level, which is on the risk reward basis very ideal for taking a counter trend trade. Okay, and all I need to do is sell anywhere within this box of prices here, okay, and put my stop just above 42,484 and take my chance to the downside, because the risk reward here is so superior. One part risk equal to 1, 2, 3, 4, at least 4.5 parts reward. Okay, so it's a risk reward ratio roughly about 1:1.5. So based risk reward, it does makes a lot of sense to be considering trading counter trend. However, okay, we have to look at the lower time frame to get some kind of sense whether the market is about to flip. Okay, here obviously we do not previously market attempt into this area here. Now note that the previous few weeks the market actually was flirting at the edge of this very deep retracement. Okay, did not quite get into it, but if you actually place a limit order based at 39,925, you should actually get your order filled. Okay, however, the week before last, the market actually attempted to trade higher but failed to hold on to its gain and close back down, and this week we have another week closing. So again, this is telling us, although the dominant trend is still positive, we have a very serious contender in the counter trend. So if you want to sell Asia, this could be one market to be looking at. Okay, Next, we're looking at the daily time frame. So this is the daily time frame. The dominant trend is still up. We have obviously a counter trend in place. So this will be the new counter trend. If you are going to be taking a short, maybe you wait for price to climb back up into this area here between 39,750 to 40,273. Okay, if market fails to get up into this bracket and comes back down, watch this index. This index starts to climb. That means the market may not move very much. So you have to switch on to a more aggressive mode. Okay, if the market is intended in one direction without very significant correction, then obviously you have to change your engagement strategy. Okay, in the 4 hours, the market has not been giving us a lot of sign. Okay, there is obviously the three-wave move here. Market has gone sideways. Indicator is not really running away, so there's no sign the market is about to run away just yet. But this could change tomorrow very early because depending on the final result of the election. Okay, so as far as the other major Asia markets, of course, the Hong Kong market. We want to look at the Hong Kong index. Now, Hang Seng Index has another bump up in prices. This is for the month of October. We can see the month of October actually is a new high for the year at 23,264, but it's right now trading somewhere near the lower end of the monthly range. Excuse me. Okay, so dominant trend is down. We have a bit of a counter trend, which is in the exact opposite of the entire world. The entire world is in a very bullish phase, and the counter trend is suggesting that maybe short-term market may have hit some kind of pocket, and there's a risk of a pullback. Okay. However, in Hong Kong market has been in a very bearish mood for many years, but the year started this year on a very positive note in which the Hang Seng hit a bottom and has actually been climbing, and this has been helped in large part by the series of stimulus package launched by the People's Bank of China, slightly less than a week before the Federal Reserve cut interest rate on September 18. Okay, so this has been the catalyst that has pumped up the Chinese equity markets and by extension the Hong Kong equity markets. Okay, so Hong Kong equity market is looking a little bit more steady right now. Okay, now we do not see any following through after the latest stimulus package that was announced. Okay, so we can see the market actually pulled back quite sharply. Okay, since the second round of stimulus package was announced, initial market was actually reacting very positively, but it did not follow through. So we have 2 weeks of negative closing, despite the second round of stimulus package being announced. So this is not good. Okay, but by and large, I think the flush that we see here, three weeks of continuous rally here, has not damaged this market seriously, in my opinion. Yes, the market has done a 3-wave rally. Does it end this corrective rally? It could, okay, but I want to see more evidence, okay, and I can't see in the weekly time frame. I will have to defer to the lower time frame. So here, this is the daily. In the Hang Seng market, the market has actually gone up, okay, and this move here is definitely not over. You can see the entire rally from this low here at 16,426. This is very gradual. If you look at it as the wave 1, if you are anywhere familiar with the Elliott wave, assuming this is wave 1, this is wave 2, this move here is obviously very impulsive. So no matter how you look at it, this is definitely what looks and feels like a third wave. And if that's the case, this entire move here from the high of 23,264 is part of a fourth. And that means there will be a new high above 23,264 over time. So if the market doesn't accelerate to the downside, okay, it starts to consolidate, it is actually gearing up for a push to the upside above the high that we have seen so far this year. Okay, so a new high in the Hang Seng Index for the year cannot be ruled out. So I am actually very interested to see how this is going to play out. Okay, and okay, sorry, I want to show you the lower time frame. 4 hours. 4 hours. Obviously, you can see market has been consolidating. So it could be a accumulation phase here. Okay, market is not really running away either to the upside or to the downside. So I think it is basically accumulating position, and the clue, in my opinion, will be looking at the ADX. Okay, whichever direction the markets decide where it want to hit, is accompanied by a rising ADX, that will be the direction I think the move will the market will be heading. Okay, basically this is how I look at it. So I'm done with the equity markets. That's a question. I don't see any question unless I'm seeing it in the wrong places. Anyway, I don't see any question. I'm going to continue going forward. I will look at the currencies. I will start off with the euro versus the dollar. So we knew that this week the dollar has again not really good, been moving aggressively in one way or the other. But we can see in the major currencies, the euro has actually been coming off. Okay, but it's not coming off in a very big way. But over this month itself, we can see since the beginning of the month, it has been basically going south. It may continue to do so. Okay, so as far as the euro is concerned, I think the momentum behind is suggesting that we maybe will see further losses in the euro in the immediate future. Okay, and if you look at the weekly, we have seen that it has continued to drop for 4 weeks in a row after this doji appear here at 1.1214. Okay, so 4 weeks of losses, and it may not have hit bottom just yet. We might be looking at perhaps another week of losses, and we'll see how the market closes at the end of this month. Okay, then that means conversely we should be seeing higher rates. Daily time frame, there was a rally attempt, but again was negated. Okay, and this is very interesting because as the market hit a high of 112.14 and be falling for 4 weeks in a row, we can see the market hit a low, and this low here is coincide with this ADX climbing and then starting to tilt. Okay, this suggests to me that a near-term bottom is in place. So the possibility we may see further down going forward. Okay, although we don't see in the monthly, but in the daily time frame, it's obviously to me that this drop here from 112.14 has hit a temporary bottom at 107.60. So there's a possibility that the market may actually bounce. Okay, so if you have not taken profit on the short side, maybe it's time to do so. And then on the 4 hours time frame, we are not seeing any continuation here, but basically based on the daily, I think it's quite obvious to me that there is a little bit of profit taking going on the short side of this market. Okay, so like I said, if you have not taken profit on the short side, maybe you want to consider taking some money off the table. Now let's take a look at the sterling. Now sterling, of course, we have seen how the UK market has not been doing too well, and that should eventually show up in the currency rates. Okay, whether the UK, the Bank of England is going to be cutting rates, like what I think the ECB is going to do, because we can see inflation is coming back up again, and we are looking at the PMI. Sorry, the PMI has not been doing too great. So obviously we will be suggesting to take a closer look at the possibility that central banks in Europe may be in favor of lower rates going forward, and this should actually show up in a weaker currency. So this is sterling versus the dollar, and sterling has actually hit a low at a 103.60 with a high of 134. And this week, this month itself, we can see that it's lower prices. Okay. Still, by and large, the market is bearish overall in the longer time frame, although we do have a rebound that's still unfolding. Okay? Here we look at the weekly time frame. This rebound here that we see is part of a longer term rebound. Okay, and this rebound here is looking to lose, is beginning to lose some momentum. Okay, so there's a possibility we may see lower rates as far as the weekly is concerned, and if we can see some kind of evidence in the daily time frame as far as the ADX is concerned, there is no clue. What's interesting is that there's this price channel that I drew a long time ago, and prices has been respecting the low end of the channel. Okay, over the last 3 days, this week before the market closes on Friday, we can see that price action was actually hovering around this bottom of this channel here. So the market had basically held up. So whether it will continue to hold up remains to be seen. But if it does bounce, you can take it that is evident of buying interest around these lower levels. But by and large, I think the currency may not be where the action is going to be. Okay, let's take a look at the dollar versus the yen. There's so many to cover, and I just picked a few majors. So this is dollar yen. Dollar yen is coming back, and this is shown by strength in the dollar. Okay, and you want to look at dollar yen strength. There are a few currency pair you can watch. Okay, other than looking at the euro versus the dollar, the sterling versus the dollar, you can look at dollar versus the yen, dollar versus Canadian dollars, and even dollar versus Sing dollars. Okay, you can see that the dollar is obviously coming back strong this month, and this month so far we can see dollar yen is back up above 152. Okay, we have not seen 152 for more than 2 months. Okay, now it's coming back in a big way, and this flush here looks that it's not even done with the rally just yet. Okay, so overall the dollar is very bullish. We have a counter trend in place from a high of just under 162. Remember, 162 is where the Bank of Japan came in to intervene. So will the Bank of Japan come in to intervene if dollar rises continue to rise against the yen? It's an open question. Okay, we knew previously they did intervene, so there is every possibility if dollar yen continue to edge higher anywhere into this dark pink area called a very deep retracement, which is bound by 157.17 all the way to 162. That area is actually good to do counter trend, meaning to say I'll be more in favor of selling rather than buying, because previous invited the Bank of Japan coming aggressively to sell. Okay, so it could come back again in a big way. So this is the monthly time frame. Let's take a look at it weekly. Now, weekly, we are still very far away from this preferred area to sell if the market wants to continue to go higher. But if it does go trade into this level, like I said, 157.60 onwards, it starts to look very attractive from a risk-reward perspective. And I'm looking for a confirmation at the lower time frame. Well, let's take a look at the daily. The daily is getting close. You can see ADX is climbing. So what it does means that this entire area where the market is rallying, okay, has been supported by a momentum. This momentum is actually quite strong, okay? So the clue here is we want to see if this ADX, when does it peak and start to tilt down? If the market continues to trade higher, this ADX will continue to climb northwards, okay? However, if it does climb into this area, okay, bordered at 154.40, okay, 154.40 onwards to all the way to 157.90, for example, that area will be actually quite attractive from a risk reward perspective to do counter trend. And if this is followed by a pullback in the ADX, it will signal to me the rally. And going short dollar yen could be more advantageous. Okay, there's one question here. Jim, thank you very much for this question. US is cutting interest rates and Japan is rising interest rate. Why do dollar yen rise? Okay, that statement that you make there is not confirmed. Okay, yes, since September 18, the Fed cut interest rate by a monstrous 50 basis points. But the latest data that have been coming in, I think the market is adjusting their expectation. Before this month, okay, markets were expecting maybe another 50 basis point cut in November, and that will come in 2 days after the US presidential election. But today, this week, expectation has actually reduced from another 50 basis point cut in November to perhaps only one more cut, and that will be 25 basis point. So there is a bit of a change in the narrative because the non-farm payroll has been very strong, retail sales has been very strong, so there's no reason to cut interest rate further. Okay, why would you want to cut interest rate? The economy is so strong, because that will invite inflation to come flying back up. Okay, so there will be less incentive for the Federal Reserve to continue to cut aggressively. Not that it won't, but based on logic, it shouldn't. Okay. Then when we look at how the CPI in Tokyo has come down to 1.8% earlier on, in the statistic that I show you, whether it's the headline or whether it's the core CPI in Tokyo, they all meet at 1.8%. It is not climbing. So if inflation is not rising in Japan, there will be no incentive to hike interest rates as far as the Bank of Japan is concerned. So the Bank of Japan may not hike rates for all we know for the rest of this year. Okay, so the statement that US is cutting rates, Japan is hiking rates is not theoretically correct. Okay, yes, there is that sentiment, but right now when we look at the latest set of data, that narrative has changed somewhat. Okay, there is no incentive for the Fed to continue to cut rates aggressively. On the other hand, because inflation is not flaring up in Japan, as far as this week's CPI is concerned, then there's no incentive for the Bank of Japan to continue to hike rates. And if the Prime Minister did not win the election today, because he is in favor of further hikes in interest rates, if he is out of the game, then there will be even less incentive to hike interest rates. So we will have to watch this development, okay? The market here is telling us that the interest rates difference between the Japanese rates and the United States rates may continue to stay at the current gap, okay? So this gap may not close so much in the near future. And of course, if that's the case, the dollar yen will continue to rise higher. However, technically, if the market goes into this bracket of prices and something else change, okay, something else in terms of economic data change, okay, then obviously the narrative will also change. But for now, okay, technically the market is very, very strong. I'm looking to see when it weakens. And if it starts to weaken inside this very deep retracement area, it gives me the incentive to consider going against the market. Okay. So again, this is my view. Okay. So I hope that has answered your question, Jim. Now let's take a look at one more pair, okay, and then we move on to the other the other markets. The other markets that I want to show you with dollar versus Canadian, unless you got another market that you want me to talk about. Okay, so this is dollar Canadian. Dollar Canadian is very strong. So you can see overall the dollar is actually very bullish. From a higher perspective, like the monthly time frame or weekly time frame, the dollar is still very much in a bullish phase. Okay, so we can see as far as the dollar versus the Canadian is concerned, it has gone to a very wide sideways consolidation. Okay, for now, as far as this month is concerned, we're not even done with the rest for this month just yet. Okay, we have a few more trading days to go, and the dollar has been holding up quite well, but there is no saying that it is moving into a new phase. The market is still in the very wide consolidation race. Okay, so as far as the monthly time frame is concerned, it's telling us market is basically dollar is basically strong, and it has gone into a sideways consolidation. Okay, so this is all we can tell from the monthly time frame. In the weekly time frame, it's beginning to look very interesting because the market is in that position whereby it is actually very interesting to see if I can go counter trend. Okay, so this is the counter trend. Dollar, you can see the background color is actually green. It means to say that the market is very bullish. The dominant trend is up, but the market has gone to a sideways, right? But sideways, you can see every time the market goes into this gray area, it go up, it pull back down, it go up, pull back down, go up, pull back down a little bit. Now go up, it pull back down quite sharply. Okay, is history going to repeat itself? Based on risk reward perspective, it does look very interesting because prices where it is right now is very low risk. The market closed at 138.90 on Friday. And the point of invalidation is just under 140. Meaning to say, if I'm prepared to take, let's say, a 30 pip risk, I'm exchanging this 30 pip risk for the potential for the market to come all the way to test here, or even bare minimum to touch 131. It makes a lot of sense, though. One part risk, this is the entire part, one part risk. 1, 2, 3, 4, 5, 6, 7. 1:7 risk reward ratio, just having the idea the market will retest 131. So it's beginning to look very, very interesting. Right now, I don't see evidence of a potential reversal yet on the weekly. I would probably have to go down to the lower time frame to see if I can see some kind of a potential weakness. Okay. So this is the daily. Daily is exactly what we see in the dollar yen. ADX is climbing, supporting this entire rally here. Okay. Market right now is in a very deep retracement area. My top side of invalidation is 139.50. Market right now is closed at just under 139. So if I take 50 pips risk in exchange for the possibility of market coming back down to retest this low, it is perfect because all I need now is the confirmation, and the confirmation will come from my ADX. The moment it tilt down, that will be my signal to go in and look for level to sell. Okay. There is another question here which I'll address. Okay. Jim is, oh, it's the same question. Okay. Okay, there's no new question. The same question. Okay, great. Let me see if there's any other question. Keep your question coming. You guys are very quiet today. So again, dollar Canadian looks very interesting because unlike dollar yen, dollar Canadian is actually in a sweet spot, okay, in which I think there is the possibility of doing a counter trend. I'm waiting for this to tilt down, okay. Is there any possibility that market has already tilted in the 4 hours? Not yet. Okay, not yet. In fact, I don't counter trend yet. Okay, so I'm leaning on my daily time frame to give me a clue. Okay, so I don't see my lower time frame, but the daily will be very, very interesting for me. So let's take a look at crude oil. Now, crude oil is if you have listened to my talk last week, you knew that I've already got long on crude oil. And on Saturday morning, the first thing I did was check the news, and the news was that Israel has actually launched a retaliation strike on Iran's military site. Okay, and what's next? Is Iran looking to counter retaliate by sending missiles over to Israel? And if it does, there is a possibility oil prices is going to surge. Okay, so right now the Israeli retaliation happens over a weekend, so we would not know tomorrow whether oil is going to react to the upside. But if Iran strikes back to against Israel, you can bet your last dollar oil is going to surge. Okay, so I believe I'm in a good position. Okay, yes, the market overall over the monthly time frame is very bullish. Okay, I'm looking for a lower level to pick up some more long position. I have a very basic long position, but I'm hoping to buy more, ideally below $65 per barrel. Okay, I'm hoping to buy more. Okay, so I think because this is the dominant trend, I want to trade the trend, right? So prices have pulled back very, very aggressively into these very deep retracement levels. So long as the price do not trade below $57, I think I'm fine. Okay, so I'm prepared to hold this position for a little while longer. So this is the weekly time frame. Again, you can see the market is in the very bluish area, which is a very deep retracement levels. And I'm very comfortable holding this position, and I hope I can add more to the position. Because when I look at the geopolitics, okay, nothing is right. Okay, in fact, everything seems to be going wrong. So Middle East is where crude oil is going to be sent, right? And if there's going to be an escalation in the geopolitical space, definitely crude oil is going to trade to the upside. So that is my basic understanding. Both technically and both fundamentally, I think crude oil should actually react to the upside. Okay, so I'm having that view. So you can see this is the daily time frame. The market has not gone very, very much either way. It went up on Monday, came down on Tuesday, Wednesday, and then on Friday it managed to recover. Okay, so by and large, okay, it is still having that momentum. Okay, I'm basically running low on battery, so I have to hurry up. So basically, this is my position I'll show you gold very shortly. Okay, gold is at a record high again. This is the monthly time frame. New high in gold is at $2,758.42 per ounce. Very, very strong. You can see the ADX on the monthly time frame is climbing, suggesting there is momentum behind this rally. And in the weekly, it's the same thing. Market is so strong. No sell. Do not sell this just yet. Okay. And in the daily, we have the beginning of what looks like a counter trend, but again, it's still very early days because the momentum is still very, very strong. Do not try to stand in the way of this freight train. Okay, so I think it's not advantageous to look to do counter trend just yet, unless we see something else happening. So far, there is no sign that the market is going to end the rally. Okay, but I have always mentioned I suspect there's going to be a important high for gold, either late October or early November. Okay, so if you're not already bought, you got to be very careful buying at current prices. But I'm definitely not looking to sell just yet. Okay, because I have no signal to sell precious metals. And silver has been playing catch up. Silver has been very, very strong this week. You can see the silver prices in the spot market has actually played higher. Okay, this is a 12-year high, 34.85 per ounce. I was kicking myself because I got out at $19 way ahead of the rally, okay? Because I lost patience. And now when I look at a price at $34.85, I was kicking myself for not holding onto that position. But anyway, right now silver is playing catch up and its momentum is behind it. However, we can see on the weekly basis, this is a long-legged shadow doji, suggesting that perhaps an important high is already in place in silver at $34.85. Okay. However, there is no reason to go short against the silver just yet. Okay. Here in the daily time frame, we are also seeing the market fail to take out new high, has been trading lower. Again, this is no signal to say that you are it's going to flip just yet. Do not sell this yet. Okay. There will be a proper time to do it only if you see confirmation. Now, this is the 4 hours. This is a three-wave move, no momentum. Okay, so far it is a classical three-wave pullback. Okay, so do not sell silver just yet, and I definitely would not want to be buying gold at its current level. Okay, I'll be looking for a more definitive answer of an important top in gold actually coming to either on the last day of October or in the first week of November. Okay, so I finished commodities. I want to rush through the last bit, which is the Bitcoin. Now, Bitcoin has been doing relatively well, but the momentum seems to be a little bit missing here. The all-time high is $73,767.50 was traded a long time ago. This high was traded in March of this year. So since then, the market has not been really going either way, but because it has started to pop back up again, suggesting that the market is leaning towards a potential Trump victory, okay? Because among the two candidates, Trump seems to be the only one talking about Bitcoin as a potential replacement for dollar, okay? So if Trump managed to win, it should rub off positively on Bitcoin, okay? So far, the market needs some kind of catalyst, and the catalyst could be a Trump win, okay? So right now, we are just watching. We are only, 9 days away from the from the US election. So we don't have to wait too long. Within 2 weeks' time, we should know the answer, okay? For now, the market is just getting ready, okay? It just needs a catalyst, some kind of news to kick it either way above the all-time high or to massively correct. But I think we are leaning towards a continuation of the very bullish trend that we are seeing. So the daily time frame is also not really helping us. The market is struggling at this gray area, which is the very deep retracement. So you can see the market actually been struggling below $70,000 per coin. Okay, but it is not losing steam. Okay, we can still see that market still continue to bounce, and this could actually continue a little bit more into the as we go into the election. So there's another question here. David is asking, wars are generally inflationary. That is correct, yet reserve banks around the world are not growing. What I mean by reserve banks around the world are not growing seems a recipe for a prolonged stagflation in the next 10, 20 years. Generally, David, you're not wrong. I'm also of the opinion that we have a real deep risk of going into a situation in which the economic growth has stagnated, okay, or even decreased while prices remains elevated. And this is the classical definition of a stagflation. We have hardly any economic growth, but prices remains elevated, okay? And this could be a problem. If you look at Japan, they have stagflation problems for the last 20, 30 years, and they couldn't really get out of it. That's the reason why Japan is the only country in the world that is looking for inflation, where the whole world is looking